As of right now, April 26, 2026, the stock market is closed for the weekend. Rezolve AI, trading under the ticker RZLV, finished its last session on Friday, April 24, at exactly 2.62 per share. This represents a modest intraday gain of 0.77% on a day where it opened at 2.66 and saw a trading range between 2.55 and 2.66. While a sub 1% move might seem like a quiet day for a small-cap tech player, the underlying volume tells a much louder story. Over 9 million shares changed hands, which is a massive surge compared to its typical liquidity levels. This activity isn't just noise, it's a signal of heavy repositioning by institutional players following recent bombshell guidance updates. The common expectation surrounding Rezolve AI is that it's another speculative software firm trying to find its footing in a crowded market. Most retail investors on the SoFi trading platform or the Robinhood app see the 42% year-to-date decline and assume the story is broken. However, the reality is that the company just posted a staggering 543% revenue growth for the second half of 2025, exiting the year with a recurring revenue run rate of over $232 million. They didn't just meet expectations, they crushed the ceiling, and yet the stock is still trading at a fraction of its 52-week high of 8.45. This massive gap between fundamental performance and market price is exactly why the recent volume is so high. Big money is starting to notice that while the price is down, the business is actually scaling at a hockey stick trajectory. When you look at the daily swings, RZLV has been a battleground. For someone using self-investing tools or an individual brokerage, seeing a stock drop from $8 to 2.62 feels like a warning sign. But look at the institutional activity. We are seeing major filings from the likes of Citadel and Alyeska. While some positions have been trimmed, over 130 institutional owners still hold more than 50 million shares. These aren't short-term flippers. These are entities that understand the value of Rezolve's recent integration into Microsoft's Foundry. By making their brainpower model suite available on Azure, Rezolve has effectively moved from being a standalone tool to being an infrastructure layer for the entire retail sector. Expectations for 2026 were originally conservative, but management just raised their revenue guidance to $360 million. If you are tracking this through Fidelity Wealth Management or Interactive Brokerage trading accounts, you need to understand the weight of that number. They are aiming for an annual recurring revenue of $500 million by the end of this year. For a company with a market cap sitting around $880 million, that would put them at a price-to-sales multiple that is almost laughably low compared to peers in the enterprise software space. The market is currently pricing RZLV as if it's a failing startup, but the reality is a business with 66% gross margins and core software margins exceeding 90%. Institutional activity in the last few weeks suggests that the smart money is preparing for a valuation reset. We've seen high-conviction buys from smaller wealth managers and steady accumulation even as the price faced pressure from a recent $250 million equity offering. That capital raise is actually a strength, not a weakness. It means Rezolve is fully funded for its 2026 expansion without needing to return to the markets for more cash. This removes the delusion cloud that often hangs over small-cap tech. If you're using investing sites to compare RZLV to its peers, you'll see a consensus strong buy rating from analysts, with some pointing toward a fair value of $10. That's a 300% upside from current levels. Now, let's look at what this company actually does, because it's often misunderstood as just another chatbot provider. Rezolve AI focuses on what they call agentic commerce. This isn't about a pop-up window on a website asking if you need help. It's about a unified intelligence layer that handles everything from product discovery to the actual checkout within a single conversational flow. They are solving the friction that causes 70% of shoppers to abandon their carts. Big names like Myntra and Rebag are already seeing 24 to 50% increases in search-driven revenue by using Rezolve's tech. This is a real-world application with measurable ROI, which is rare in a sector full of proof-of-concept companies. The business model is built on high-margin software licenses and recurring revenue. They reach nearly 60 million consumer devices through their SDK, which gives them a massive footprint without the high cost of customer acquisition that plagues other retail tech firms. When a user interacts with a powered by Rezolve experience on a mobile app, Rezolve is capturing data and facilitating transactions in a way that generic AI models simply cannot do. Their brainpower suite is specifically tuned for commerce, meaning it knows the difference between someone browsing and someone ready to buy. Before we look at the risks, I want to hear from you. Comment below how many shares of RZLV you currently hold, or if you're waiting for it to break back above the $3 mark before jumping in. Looking at the future outlook, the biggest catalyst is the partnership with Microsoft. By integrating with Dynamics 365 and Microsoft 365 Copilot, Rezolve is effectively being handed to every enterprise customer on the Azure cloud. This partner-led growth strategy is how companies like Salesforce and ServiceNow became giants. The reality of this partnership has not yet been priced into the stock because the market is still focused on the short-term pain of the January capital raise. Once the Q1 and Q2 numbers for 2026 start hitting the tape, showing the impact of this Azure integration, the expectation-reality gap will likely close violently. Of course, there are risks. Small-cap stocks are inherently volatile. If the broader economy slows down and retail spending takes a hit, Rezolve's growth could be dampened. There's also the dependency on partners like Microsoft. If those priorities shift, Rezolve has to pivot. However, with zero debt and a massive cash pile from their recent raise, they have the stay power to weather a storm. They are the natural consolidator in this space, meaning they are more likely to buy up smaller competitors or be acquired themselves than to simply fade away. If you're using the Robinhood app or the Fidelity mobile app to trade RZLV, you have to be prepared for the swings. This is not a stock for the faint of heart, but it is a stock with a clear path to $1 billion valuation. The divergence between the crashing share price and the surging revenue is one of the most significant mispricings in the tech sector right now. Analysts are projecting a positive EBITDA of nearly $10 million for 2026, which would mark the transition from a burning cash growth story to a sustainable, profitable enterprise. The transition from a speculative play to an infrastructure giant is never a smooth line. It's often a series of sharp drops followed by massive vertical moves. Rezolve has already survived the sharp drops. Its presence at Shop Talk 2026 showed a production-ready engine that is already converting users for major brands. While most of the market is still staring at the 2.62 price tag and worrying about last year's performance, the fundamental reality is a company that has more than tripled its revenue guidance and secured its financial future. For anyone looking at online investing options or seeking investment help through a SoFi robo-advisor or Schwab Intelligent Portfolios, Rezolve AI represents a high-reward, aggressive growth component. It's the type of stock that often gets overlooked because it doesn't have the name recognition of NVIDIA stock or Apple stock, but it operates in a $30 trillion global commerce market. If they capture even a fraction of a percent of that market through their agentic AI, the current share price will look like a historical anomaly. In summary, the expectation for Rezolve AI is that it's a struggling small cap facing a tough market. The reality is a company with over $230 million in annual recurring revenue, a massive partnership with Microsoft, and enough cash to execute its vision without further dilution. We are seeing a classic disconnect where the business is performing at an elite level, but the stock is still reflecting old fears. As institutional volume continues to pick up, the window to catch this at these levels is likely closing. The depth of their tech, combined with the scale of their partners, makes RZLV a unique player in the AI space, one that is actually focused on converting conversations into sales. Whether you're using interactive brokers for professional-grade tools or just checking your Robinhood investments during your lunch break, keep a close eye on the 2.70 resistance level. A break above that, backed by the kind of volume we saw on Friday, could trigger a move back toward the $4 range as the market finally begins to digest the $360 million revenue guidance. The authority in this analysis comes from the numbers. 543% growth is not a fluke. It's an execution of a massive scale-up. As we move further into 2026, Rezolve AI is positioned to be one of the standout stories of the year, provided they continue to meet their aggressive ARR targets. Stay grounded in the data, watch the institutional flow, and remember that in market, reality eventually always catches up to the narrative. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.